Hi everyone, so today we're going to be doing a new stock analysis video for a new company called Kratos Defense. Dom, whenever you're ready.
All right, can you see my screen?
Yeah, perfect.
Cool. So we're just going to go over a little bit about the company, kind of like their area of the market that they work in, and then we'll kind of jump into their latest earnings report. So first off, kind of how they got their start. So Kratos Company began in 1994. It was initially known as Wireless Facilities Incorporated. They basically started off in telecommunications and doing lots of infrastructure with that. Apparently, in the mid 90s, early 90s, it was a really growing market at the time, so that's where they saw fit. But then after a little while, they decided to shift gears, and then they focused toward defense and government spending contracts. And so they started doing stuff for Department of Defense and kind of changed up their company going toward that. So they kind of did a lot of like R&D, acquired some companies, and they're really kind of sold in like a couple of major areas for contracting for Department of Defense. Those sections are like drone technology, unmanned systems, it also mentions that they did stuff with space and satellite business. And so obviously that is going to have a big impact as well for the government because they do tons of stuff in space, satellites and all that. So that's kind of where like their main focus is now. And they put a lot of priority into making sure they acquire the right companies to kind of work on that kind of technology, obviously, R&D themselves, the companies they own. And so that's really their main um, focuses at this current time is a lot of that so they can sell that kind of stuff to the government and make the big money. All right, so let's jump into their Q3 earnings for 2025. Um, Honestly, pretty good. I wouldn't complain about most of these numbers, but we'll take a deeper dive into it right here. So it's reported that the third quarter 2025, excuse me, 2025 adjusted earnings of 14 cents a share, which beat the Zacks consensus estimate of 12 cents by 16.7%.
Mm-hmm.
Bottom line also increased 27.3% from a year ago's quarter's 11 cents. They also report GAAP earnings of 5 cents per share compared to 2 cents in the third quarter of 2024. Not bad either. Total revenue was at 347.6 million, which beat the SAC's consensus estimate of 324 million by 7.1%. Figure also rose 26% from 275.9 million recorded in the year ago quarter. So as we can see, this quarter actually did pretty well, beat all the earnings requests or all earnings expectations. Can't complain. I did want to mention one other thing that was pretty important. They do have a pretty considerable backlog. So it says the total backlog at the end of the third quarter was 1.178 billion dollars compared to 1.076 billion at the end of the second quarter of 2025. So they got quite a bit more in contracts only in one quarter. And again, this is the backlogs. This is money that's going to be coming their way at some point. It just hasn't been issued to them because it's for future work. But that's also a great thing to see, especially for defense companies, just because you're basically getting guaranteed income as time goes on. So I'd say overall pretty good quarter. And then, like I said, nice to see that the backlog also grew. So I'll let Matt take over and he'll kind of go over the current financials of the company and we'll take a look and see how that's going.
Okay, thank you, Dom. Appreciate it.
Thank you.
All right, so let me go ahead and the first thing we're going to cover is simply Wall Street. So I'm going to go ahead and share my screen. And yeah, I just don't see it here. I mean, it doesn't look great. You have negative free cash flow of 93 million, negative 93 million. The next 3 years, it's still going to be negative, or yeah, 3 years or 2 years, it's going to be still negative 20 million. Perhaps there's a route for it to be positive, but it's still not projecting that. So yeah, I'm not sure about this at all. Now, the financial health of the company, it is okay. We have no debt, so that's good. A lot of cash, a lot of equity, so good for them. That's perfectly fine. That's no problem at all. Now, when we take a look at my DCF is going to say that it's 87% overvalued. Yeah, big overvaluation. And Wall Street forecast, pretty much the same thing, 85% overvalued. It's only growing like 12%, so it's not like a huge growth metric. So I'm not really sure what's going on here. Now, next when we check the net income of the company, right? It's okay. I mean, it went from negative 2 million to 20 million, but it's not, I would say, incredible. It's just it's all right. It's gap profitable, which is good. So yeah, uh, when we check the 52-week high and low, right? It's at 103.37. The 52-week high is 134, and the 52-week low is $23. So you are not even close to it. You will be very close to that 52-week high mark. So yeah, I would not say right now it's great. It's the shares are already up like 36% year to date here. Hold on, let me just show that. Yeah, already 30% year to date. So still ridiculous. And lastly, Tipranks is going to say that's still a strong buy, 12 buys, 3 holds, and you have 12% upside on the stock, which again, you have the price of 103, an average of 116, and a low of 80. So again, I would probably wait for some kind of sell-off or probably a big sell-off because this is super overvalued by pretty. I like the company, but just based on metrics, it just seems overvalued. Dom, is there anything you want to add?
Nah, not too much, honestly. Like you mentioned, like the overvaluation really kind of makes it a tough one.
Yeah.
But it seems like a decent company overall.
Yeah. Yeah. Okay. Thank you, Dom. Thank you, everyone.
Thank you.